Hi, welcome to the Market Alert for Thursday, the 9th of March 2023. So good news is bad news again. Jobs data and jolts market send rate hike odds soaring, while soft survey data and hard industrial data have been notably disappointing since the start of the year. US labour market data has shown no signs of weakness at all. Again, this is something we've pointed to in the Market Alert. Markets chop on hawkish leaning, ADP and jolts dovish Powell tweak, and also US stocks finished mixed with price action choppy as markets digested the jobs data, and Fed Chair Powell reaffirmed his hawkish view. And speaking of which, we've got the numbers tomorrow, haven't we, for the non-farm payroll numbers. So the market will be waiting for this tomorrow. Today we've only got the unemployment claims, and they're forecast to have increased by 5,000 over the month. Given a population of 300 million, that will soon be discounted, won't it? Tomorrow's numbers are the big ones. And like I say, this 224 to 517, given the three news items I've just read to you about the jolts and the ADP, it's going to be an interesting one to see if they bring it, or the number comes out at 224, that's for certain, because the other ones haven't. Maybe it's wishful thinking, I don't know. But then they'll probably revise this down to 150, which is, again, something that they do each month. 10 minutes after it's come out, the market tanks, then they revise the number, and then they bring the market back. So, again, we'll just have to wait and see. Okay, let's move on. Have a look at the Dow and all of the other stock markets, currencies and metals, and see how they fared during yesterday's trading session and Powell's second day at the coalface. So in the Dow, you can see prices have traded back yesterday to the 89% retracement, up to the 20 bar 50, moved all the way back to 89. And you've also got this low at 32,576. The market finding support on the overnight and looks set to make its way back to the upside. And you can see already it's starting to do this. We had a bit of a shakeout overnight, but already at the DP and going through it, heading back towards yesterday's high. Talking of yesterday, market down in the pre-market with they weren't the ADP. Yes, it was Wednesday. ADP numbers. And then the market down in the main session as Powell spoke, down to the S1, and then we made our way back up before the close of the trading session. What a surprise. In the German DAX, we have a bit of supply in the market. It's no big deal. The market moved all the way back up yesterday, not closing below the 5-bar moving average. Overnight, the market's already up as well. Bit of supply coming into the market, and we are heading towards a bit of an overbought situation. But that will be discounted, obviously, because of the non-farm payroll numbers and wanting to send these markets back to their all-time highs. In the weekly chart, you will see this in the German DAX at 16,207. And we're not that far off at the moment. You can see we're heading back to 89% retracement from the high to the left here, all the way back up and to the 15,800. That's the target for today. Go back to the 30-minute chart. Let's just compress the chart a bit and have a look, see where that is. And it's only a couple of 100 points away. In fact, 150 from there to there. So 15,800 from the weekly chart is the upside target. May have a shakeout to begin with in the first part of the session, as we normally get, but the target is 15,800 on the upside, which is easily achieved when there's nobody selling into the market. 5-minute chart, we had a bit of a shakeout in the first part of the futures, moved down slightly, and then we took off, and then we just kept retracing, becoming overbought, oversold, and the market ebbing and flowing nicely, as can be seen here, making its small pullbacks and continuing to move to the upside. The only shakeout that we had was the ADP numbers at 1:30, and then the market resumed. Overnight, prices continue to fare nicely, closing above the DP there, nowhere near, and also in this time frame, the 5-minute chart bouncing off the 200 MA as well each time. So progress is being made there. probably drive up straight through the like yesterday morning. If you go back, market opened, and the important thing about yesterday, which again I keep mentioning, is that it went straight through the previous day's low. They just drove the market straight up 30 points to the 200 MA for 5 minutes, then managed to push on through, never closing below the 5-bar moving average, and that's your measurement of momentum. As long as it's moving up in the parabolic as well, then your trend is confirmed there. In the S&P, also retracing 62% there. Got demand for yesterday, trying to get back above that 4,000 psychological level for the S&P. It's just above here. We went to it yesterday but couldn't hold above the DP overnight. Just need to take out that 50 close, and then the high is also tying in with that 4,000 there. In the FTSE 100, you can see that we're still sideways. We've got some demand for yesterday. Market still holding at 62.78 and looks ready to, as if it wants to move back to the upside. Why do I say that? Well, it's not going down, is it? It's sideways and holding, so the odds are that it's more likely to move to the upside. It did do this yesterday morning, but the ADP numbers brought the market back. Bit of odd data there overnight, but the market needs to get back above the DP, then it can head back to the high of yesterday. In the currencies, the GBP JPY, bit of a sideways move still after the shakeout from Tuesday when Powell spoke. Yesterday finding support and sideways. 30-minute chart shows the market coming back to 89% retracement, then selling off yesterday morning down to the S1, having gone through the low, but they soon brought it back, didn't they? And then back up, so a V-shaped correction yesterday for the GBP JPY. In the pound, we had a very tiny bar yesterday. The pound slammed on Tuesday. Dollar rally, and we're at 118.407, where this support is at the moment. Yesterday, choppy session. Just see the market's reaction there to the ADP. Obviously, all eyes set for tomorrow's non-farm payroll numbers there. Already at yesterday's high, though, unlike the other markets at the moment. And in the dollar, yesterday, lackluster, despite Powell speaking again overnight. Bit of weakness there. Quick look at the 30-minute chart for the US dollar. You can see their reaction to the news, but drifting down on the overnight there. And finally, in the metals, silver continuing to be under pressure, and I expect this low to be taken out during today as well. Despite the dollar finding a bit of support, the aim here is to get this market down to at least $18 an ounce, or just below where it was before. And they can do that tomorrow quite easily if those non-farm payroll numbers come out less than that 224, I think the target was. But yesterday managing to rally a bit, but overnight the weakness already starting to come in. So watch the low of yesterday being taken out by 1:30 p.m. In the gold market, back at 89% retracement, a bit like the Dow, sitting there finding a bit of support. As I've said yesterday, and again I'll just show you the silver market way below this low, which is the same low as you see in the gold. This has gone through, but gold holding that support there, so you can see there, which is why the gold silver ratio, when we look at it in just a moment, is spiked to the upside. So gold yesterday managing to move higher. The ADP numbers also helping with this, but it's soon sold into and brought back so that the central banks can keep accumulating gold at a cheaper price. That's what this is all about, using the paper market to make the spot market cheaper. If that wasn't there, I can just tell you now, gold wouldn't be $1,800 an ounce, and neither would silver be heading down to $18 either. And in the gold-silver ratio, you can see that we're trading at that 90.69 resistance that we've got to the left here, all the way over. Let's just have a look at a bigger time frame, see what we've got above this. Go to a weekly chart, and you can see where we could end up quite easily at the 96 level there. But you can see how this has moved up all the way through 2023 so far. They don't like to have this in the lows, and if we have a look at a monthly chart, to see where all of the data is. Can we actually have all of the range? No. You'll see there that over the long haul that we have been down to levels such as these, down to 28 back in 2011 when silver was allowed to go to $50 an ounce, and then you've got the other extreme up here where we went to 127 or thereabouts. I think it was 125. That really made silver cheap at that point because it dropped down to $13 an ounce. That was during the COVID snap there. And yeah, so you can see we've got plenty on the upside yet, but certainly the 100 plays a crucial part on this. But down to $18 an ounce for the metals market is likely to see prices go over the next few weeks. Okay, that will do it for this one. And let's see what the market does today in readiness for the non-farm payrolls tomorrow. Okay, that's it. As ever, thanks for watching. See you in the next one.